This was one of the daily questions that I posted about a month ago, and it was, what does it mean when a loan or bank debt includes a balloon clause? And I got a request within the comments to do a video on what exactly a balloon clause was, and only 35% of you got this correct out of the 827 people that answered this question. So figured this was a good video to make. And by the way, I post daily quiz questions, so if you like to get a daily accounting, finance, economics question, please subscribe and you'll get that on a daily basis. I try to post it around 8 a.m. every morning. But this video, we're going to dive into what a balloon clause is in a loan agreement. So let's go over that. All right, we got our loan amortization schedule here. We have $10 million that Jackson Incorporated is borrowing at 6% interest. It's going to amortize over 120 months, but the loan term is only 60 months. So what exactly does that mean? If we have a 60-month loan term, but the amortization's over 120 months, 10 years versus 5, that means we're going to have a balloon payment at the end of this loan. And a balloon payment means that at the end of the loan term, there is a balance due. It's going to be a large lump sum payment. In other words, the loan doesn't fully amortize. And how it works is the borrower usually makes smaller payments that are based in a longer amortization period. In this example, 10 years, 120 months. And at maturity, the remaining principal is due all at once, called the balloon. So at the end of 60 months, 5 years, there is a balloon payment that is due. And if I scroll down on my amortization schedule, and see I'm paying $111,000 a month, I get to payment number 60. Jackson Incorporated owes $5,742,598 at the end of year 5. It doesn't amortize itself to zero. So you got to look at that situation. You're either going to have to come up with the cash to pay off the loan, or you got to refinance that into a different term loan. You'll find balloon loans in commercial real estate loans, business term loans, and some mortgages. And they are typically going to be shorter term loans, 5 to 7 years. You're not going to see a long-term balloon loan. At least I've never seen a long-term balloon loan. And why would somebody do this? Why would you subject yourself to a balloon payment? Well, there could be cash flow needs. You might only be able to get a 5 to 7 year term loan with a bank, and you really need the cash flow to amortize over 10, maybe 15 years. So some banks will be agreeable to a balloon payment. They'll amortize the loan over 10 years, knowing that you're going to have to refi or pay off the loan at the end of 5. But from a cash flow perspective, you need that payment, you need that P&I payment monthly, annually to be less. And there could be a lot of reasons for that. There could be an eventual sale, there could be property, there could be business assets. There could be growth that's going to happen over the next 3 to 5 years that you need the cash flow to be smaller in those years 1 to 3, knowing that year 5, you're either going to refi or pay this loan off. There's some good reasons that a balloon payment might actually make sense. Now, there is risk and consideration when you're taking on a term loan mortgage that has a balloon payment. You're going to need to plan to refinance or sell the assets before the loan is due. Either you refi, take on a new term loan, or you need the cash to pay off the loan. And there's a credit consideration here. There could be a situation where the credit market's weak and you're not able to refi the debt. That's going to put you in a really bad situation if you are cash strapped. Can you pay off the loan? Can you not pay off the loan? You don't want to put your business, you don't want to put your personal self in a situation like that. So you got to think really hard before taking on a balloon loan. So thank you for requesting a video to go over what a balloon loan is. And hopefully when I post this question again, I will post this later down the road, we'll get a better response, and more than 35% of you will get this question correct. Thank you for watching the video. Have a good rest of the day, and I will see you in the next one. Take care, and goodbye.